Hey, good morning, everybody. Bob Trade Genius, the 13th of October. I'm going to go macro here, and I'm going to just talk the ETFs on a daily, and just kind of give you my thoughts, and also kind of how I think about them. Now, I've been following this box now for a while. I'm intrigued by this as probably an ETF of the future because I think robotics and automation and artificial intelligence and virtual reality and all these things are going to become absolutely massive, especially as we start 5Ging everything. I think this is going to really break out. And then just looking at my charts here, I'm going to just so you can just see this here, is that it's been in a big trading range and it did a double top here and sold off. This is the 65 period moving average, my bull bear line, and this is the 13. And one of the things that I like to look at is that if I can get something to come down and pierce this green line is the 2 standard deviation line for the fixed channel line you see here, and then you buy those buy signals down here. And they pushed up to here, and we got a number of sell signals, and if you didn't take those because it didn't go far enough up, the 13 starts turning down, you should have got out here. Now it came underneath and it's popped back up, and if I were to buy this, and I'm not at the moment, I'm just talking just in general, is that if the 13 turns up higher and we're above the 65, it's worth a trade. And then you're just gonna have to watch it. If it breaks back below the 65, then this is the failed breakout. In a second, let me just check, see if I lost my I'm good. So DBA is the agricultural ETF, and on a daily here. Let me get rid of on the daily here you have it's still scaling down, but I think, and we're going to talk food here again, is that I think you're going to start seeing food inflation, which is going to be ironic. I think just like in 2007, I think we're going to see a spike in food, and we might even see a spike in energy if they keep flooding the market. It all depends on how effective this round of QE is. If it's just try to keep deflation at bay, I think energy stocks will probably stay stuck, but food it does not depend on the liquidity as much as it does the weather. And other than Brazil, everybody else is in a world of hurt here. And so this is breaking over to 65 too. And if you saw my little note here too, is that like I said, I like to look at things that break below here as buy areas, and so this is a natural time for DBA to rise. And what I like to see is, and I don't trade this one as much as I like to trade things in detail, because the underlying is because it just doesn't move that much to interest me in terms of the speculation. But if you are a long swing trader and you're looking for something to balance out the food inflation, is that you need to look at DBA. The only problem with DBA is that these future contract rolls tend to work against the price, and that's why you just have to kind of catch these bottom moves. But price of food is definitely going up, and from the producer level, North Dakota got totally wiped out last week. So something we're going to talk about more. Here's emerging markets. A lot of these charts look alike, and we have again, it's coming up on the 65, kind of broke through. I think a lot of people thinking that the Fed just is going to start throwing money at the system, and also that we have the situation with China here starting to heal. And I think a lot of people just think that the emerging markets are going to start taking off here. I don't know. I guess the dollar can get weaker, but I'm not a big believer the emerging markets are going to do well at all. So I just think that That I think it's just a fantasy, but the charts are saying, hey, broke above, 13 has moved higher, and so you take a look at taking a shot here to see if it's going to come up top of the range. The banks looks the same, doesn't it? So it's really interesting how everything's so damn correlated, and I just don't see how the banks make money going into a worldwide slowdown, 2021 recession. They can't get money on spreads. They can't get money on interest. Their customers are starting to default on their loans. It doesn't look really, really good for me. But again, you play the bottom of these channels, and this broke out. But look at this hammer, big inverted hammer here. This is worse than a shooting star, and it's worse than a gravestone doji. So we may see this thing push back down again. GDX, I'm kind of bummed here because I am so minor, myopic, if you will, but this sure as heck looks like a complex head and shoulder here happening. And I may just have to bail on the minors if GDX gets below this 26, 25 area here, and I'll play the bounce just like a mouse to cheese here with a signal, see if I can catch a move. But if that breaks down from here, then you're looking at 31 to 26. You're looking at them unwinding this whole move from June. So just keep that in the back of your mind. I'd be so bummed if that happened, but I have to be open to the possibility. So you got to play the next bounce on this, and if it fails, then look, I would buy nugget puts and see where this thing goes. GDXJ looks the same. GLD, it's a little bit better, and this is where I'm hopeful, is that this is technically still kind of a head and shoulders pattern, although it's angled up. There's nothing in the rules that said that the shoulders this whole thing has to be flat. Okay, it caught this bottom, moved up, and so now we have to see if this thing holds. It's still above its 65, and so it's definitely something to watch here, because I'm not really sure if this thing's going to break out or not. Next week will be a pretty good tell, because I think the market probably had a short-term top, and we're going to see how everything reacts to the trade news, sell the news thing. Small caps, I think, are the most vulnerable of everything. It's got a bounce here on its -1 standard deviation. It pierced that green line where one would buy. I have puts on IWM, but I hedge them all the time, so I run calendars on them. My expectation is that over time IWM will keep falling, so I take my hedges off when we get a sell signal, and I put the hedge back on when we get a buy signal, and then I just keep rolling my contract out. So far it's been working pretty well, and I'm just going to continue that process until we'll see IWM going into a buy cycle. Lithium had a bounce, but right up to the moving average here, so I'm not really sure. I know a lot of people have the electric car fetish going on right now, but just car sales in general look really weak, and electric cars are not cheap at all. And I know it's one thing to talk about total cost of ownership, but the problem you have is that people just don't have the money to basically upfront pay your gas bill in your car. And so I think we're going to see lithium just continue to drift. And by the way, there's no shortage of lithium in the world. People talk about that all the time. It's all over. It's one of the most abundant elements on Earth, and they're finding it all the time. So I wouldn't get too excited about lithium. Again, this area here is that this is a pretty good downtrend. I just stay away from it. Terminal decline. This was a joke, and anytime you get you get a sell signal, just sell it. MJ, all the components, they're all going to zero. Nobody's making any money in this space at all. I mean, no one. And so just look for these short covering rallies and buy puts on MJ. Qs are the same. They got a really big bump here because of semis. You know, a lot of people are really excited that China's going to Huawei and all this other stuff, but we heard nothing about that at all. And so, you know, we have a flat consolidation here on the Qs again. You buy the break of this 2 right here, and you let it run. But again, with that gravestone doji on SPY, I'm not too sure how much higher the Qs can go. And if it gets up in this range here, I'd look for a sell signal to sell it back down. You know, so many things are in ranges now, because the only thing that's really pushing the market is when cash comes in on passive funds and short squeezes. Other than that, people are still selling. The outflow, institutional outflow, has just been tremendous. So somebody's going to get stuck, and we're just going to have another flash crash here. SILJ looks like GDX. Silver looks okay. Silver looks like gold. So the metals are holding up. And so, you know, you can't sell silver if it's above its 65. So, you know, again, look for accumulation and then let it break down on you if it needs to. But I think silver is just gonna keep grinding higher. It is in deficit. So here's the semiconductor index. And this thing's been good trades here. Every time it gets down here, nice pop. And but again, it double topped here, and if it can't break out of here and we get a sell signal, then I think this is a failed rally. I talked about SPY already. Okay, you can't hardly see it here, but that's a gravestone doji right there. SVXY, for those who like to trade the volatility, is that you know, the VIX is down pretty good right now, and I think this move has made its run. And if this, you get a sell signal SVXY, I never trade this short. So, but if you had to trade the VIX short, you know, you could do VXX calls or you could do SVXY. When I mean VIX long, please, is you get this as a you can buy these puts on these if you wanted to. I think the next downstroke on these and the upstroke on volatility will be pretty intense. So again, I prefer trading VXX on that. If I don't have it here, I'll show it to you. And I like to trade it from the short side. This is what's been lifting the market. And we're right back up to the moving average again here. This is TNX, the 10-year. And then I saw a lot of stuff this weekend about when QE starts, they sell off this bond, which then floods the market into the stock market. But I'm a little cautious because in the past, it was definitely people were pretty excited about the chances for growth, but everybody around the world now is looking at recession. We have so many places that are negative in yields, and these negative yields, so many people are going to flood into our market to buy up these bonds. So I just don't know if they're going to get the push they think they're going to get on treasuries this time, and that's why I'm not still too freaked out about what's going to happen with gold, silver, and the miners. And I think this is going to cap the move. Plus, people don't realize yet if $60 billion a month is going to be enough. So that's the thing you have to worry about is that are they just trying to stay alive here? And people don't realize, you know, every time somebody pays a mortgage, I use me as an example. You know, I have a mortgage on my home, and literally almost 40% of my mortgage payment now is principal reduction. So they have to replace that. Remember, this whole Ponzi scheme runs on credit growth. All right, they're running out of kids. They ran out of poor people. Housing market has really been flat, and then businesses are already barred to the hilt. So when they start rolling off these when they start rolling off these bonds, these mortgages, is that they have to replace this credit somehow. And basically it's the government now that's doing all the borrowing. And I'm going to show a chart in a later video of how much of the QE was absorbed by the U.S. government. So, so that's why this would be an interesting thing to watch. And, I'll start changing my mind on this if they get the 10-year back up here to 21.44 and turn it into some sort of buy scenario. Then they won. But in the meantime, I think this thing's going to scale right back down again, and then we're going to see gold, silver, the miners, all that stuff lift, and we're going to see the market struggle again. UNG, I bought UNG on this buy signal here, and it hit it and it fell back. I held it, okay. I even moved my stop down on it. Is that I'm looking for another upcycle in natural gas going into the winter. It's going to be a lot colder what people think. I think they're playing a game right now in terms of draw and injection, and I'm just going to hold it. This is, I always call this the scare the children move. So it popped up to this moving average and came back down, and now I think the next upcycle is going to happen. And so if you're not in it, you're lucky. You can get in at a good price, I think. And then we're also long CHK, which is actually performing pretty well. And then we have URA. This is an interesting one too. We got a buy signal here. Usually I buy this. I didn't. Like everything else, I only have so much capital. And but if you're interested, I think this has another upstroke coming, and I think there's probably a chance for a good 10% move here for you. Okay, now the energy names is that, look, the really rich, this is where they park their dough, okay? And they're just trying like hell to keep oil prices up. And if they're successful, then XLE will do well. But this trade has been really, just trade the edges, you'll make good money. Here it got up to +3 standard deviation on that stupid fake Saudi Arabia war news. Came back down. Now we got some news that the Iranian tankers were being shot with missiles. More fake news likely. But people are pouring into oil. You notice the TNX went up, oil went up. Just keep an eye on these things. But like I said, it has to get over here to get into another upcycle for me. But if it fails from here, then oil's going into the 40s. Okay, VXX. This one always wants to go down, and for a long time here, my dog's crying here because I won't let him in the room while I'm doing the video. See, it likes to go down, and you get these impulses higher. But here, this really got weird, and I think the volatility game. This is the trade I like to trade the most, and so it pushed up here again, and up to the short side. I don't trade this on the long side too much. I never know when these things end. I never time them right. So you just wait for them to push higher. I've been trading this. I normally trade this on the hourly, okay, where you can see the moves a little bit easier. Okay, I didn't trade this last one here because of the trade news. I just had no idea what was going to happen with it. I should have known better that, they always are manipulating, but I didn't trade it. It would have been a super trade. Okay, down from, you would have caught it here. You would have not been smart enough to do this, most people. But you'd have had it here at 25.5, went down to 23. And, the rule of thumb on that is that, you'd have made half that move here. So if you put $1,000 in, $2 move, you'd have doubled your money on that. So, but I didn't take the trade. And I think now we're looking for another upstroke here in volatility. But if not, it's going to have to do it without me because it's already down to 2 standard deviations negative. I've not traded biotech in a long time, and it's just too news-centric for me. But it's trying to break out again. It has a sell signal here, so we'll just see. But if you like this stuff, a lot of the big moves, the stuff I filter every day, probably 3/4 of my buy screen are biotech companies. So, if we get an upstroke here, I just think going into the political season with the everybody focused on healthcare, I just think this is going to be a tough a tough bet, although it's putting in a W bottom. So it may just break out because nobody's expecting it to. I personally stay away, but if it hits the 65 and you get a buy signal on this, you know, it's a good trade. It's making 10% move trades here, so it's nothing to sneeze at. XLE is interesting. Another W move here, if you notice. And if it holds a 65 and you get another buy signal on this thing, I think it's probably a good trade higher. I think it all depends obviously on the price of oil. We talked FAS already. Here's XLV. This is the healthcare stock. I think this thing also looking showing the W move here. But look at that sell-off. That's really interesting to me. So it could be that we're moving out of risk off assets to try to go to risk on. We're just thinking this move has already made its move. But I find it interesting that nothing could get back above these September highs on all this great news with trade and with the QE news. So we may just be tapping out here as well. XME had a nice push, you know, and one of the things I look at too is, and I actually bought XME and I sold it right away same day because I was worried that I was going to get head faked out, and of course it just shot right up higher. So you know, live and learn. Sometimes I don't smart myself, and but again, you know, it all depends on, you know, the economics of the market here. But I think we're looking at double sell signals here, 2 standard deviations. I wouldn't be buying here. And that's pretty much it for now. So I'll talk about food later, and I'll talk a little bit more Fed. And there's just a lot going on, and I think it's really important for you now to start looking back underneath to see if you can start seeing where the tea leaves are going. But look, they're trying to recreate a 2007 kind of environment going into the election. I just don't know how successful they're going to be. Anyway, thanks for listening. I know it's a long video, but I hope you enjoy it. Have a good one. Bye-bye.